So let's look at B- BTC US DT, Shavy FSO. So we're on a daily time frame, and we chose to start on the daily time frame. The daily TF gives us clear directional bias, and you can see the market is playing a range and technically not making a swing high, which will represent a beginning of a fresh rally. So the market is consolidating, and from my experience, BTC will consolidate for a very long time. It's not showing signs of a breakout, so we must trade the consolidation with a technical mindset. Now, let's first of all find out our floor and find out our roof. Since this becomes a consolidation, we need to find our floor, we need to find our roof, and this is going to be our new floor after the price rallied. This is the first drop red candle and rejected at this level. 85 253.94 level was rejected after that heavy bearish and bullish rally. So this level was rejected and price continued to upswing. Then the next we want to find out is our roof. Where is our roof? So this is our roof. So we're going to change the colors to make it easier for us to identify that we're in the range. And since we're in a range, your focus is to let price return to the roof or price return to the floor. So price should be able to do one. This is how you are going to trade BTC in this season. So I will also show you when price will pull out and when price will pull down using our strategy. So now we have our roof, now we have our floor. So the next thing we want to find out is yes, the market is ranging, but in a range, when you scale down to lower time frame, you will find a trend. On a higher time frame, it's ranging, but on a lower time frame, there is a trend inside the range in a lower time frame. What does that mean? That you are still going to find series of higher high, higher low, higher high, higher low in a lower time frame. But on a higher time frame, the market is ranging. We want a market that will clear a market that will create a clean structure. This is what we want: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher. This is what we want for an uptrend. And based on what the market is doing right now, it's ranging because we are having a consolidated floor. We don't want a consolidated floor. We want an elevated floor by way of an ascending trend line. So when the market gets into an ascending trend line, then it aligns with the long-term direction of the trend, which is bullish, thereby creating higher high, higher low, higher high, higher low. That is what we want. So for now, you only find that in a lower time frame: 1 hour, 2 hours, 3 hours, 30 minutes, 45 minutes, and the rest of all that. So price are after break of structure, break of a supply roof, and price have come to retest that supply roof on 4 hours close. Market has found demand at 102, 173, and shown a significant buyback, rejecting the floor. The daily candle is still very much active. We have 13 hours to close of the daily candle, so that will be watched to see how the the price action closes for the day. Now, in this rally, we have a break of structure and a possible retest to a broken structure. The first resistance we have to upswing was at this level, and price came and retested and upswing. I do not want to deal with the wicks. I want to focus more on the body of the candle. The reason I want to focus on the body of the candle is to guide us in our journey to where next and what could likely happen next. But this is the first break of structure we have. The first sincere break of structure we have is this on daily time frame. So this guides you into a potential drop in price that if price is falling, this will be your new floor. This is your new demand floor where you expect price to potentially kick in and begin to show sign of reversal. And it makes a whole lot of sense because at this point, you are technically buying low and hoping that the market will swing and you're able to get off the market with a considerable gain. So we have here market creating here a supply roof, and on that supply roof, market have created a structure. Let's see, we have here supply roof, break of a supply roof, price returns here on demand. So that's the point we're trying to make. So now the next thing now we need to point out is the trend. I said on lower time frame you will find a trend, but on daily the market is consolidating, and we have a trend at this level. And if we concentrate only on the body of the candle, why we concentrate on the body of a daily candle is we are looking for breaker structure on daily time frame. So if price breaks out from the body of a daily candle, it helps us guide our buyers that now we'll now begin to look for an opportunity where price can come back for a possible retest and continue to respect the current price action. At this level, we have price creating a demand floor by way of rejection, and price returns again, and we have a breaker structure. And at this level, you can see price came here to retest the structure and have sold. And also trying to make its way again, but couldn't get back to the level. And the most important thing is let's take our trend line to focus only on the body of the candle, and let's forget about the wicks. So we'll stay in touch with reality. Now, this is the trend we have. So what does this mean is that we are waiting for a tap into the body of a daily trend line. Now we are neglecting all the wicks because these wicks are distraction. They are distraction that you will face as a trader, whether as a retail trader or as an institutional trader. But what does weak mean? Weak are sign of rejection. They are signs of strong area of rejection. It tells you a story over a period of time. It tells you what market is about to do. So this is where you begin to look at candlestick patterns, where we look at hanging man, we look at bearish candlesticks, we look at engulfing candlestick, we look at greystone doji. So there are a whole lot of them which we look at. But our structure covers all the candlestick patterns because structure supersedes any form of candlestick pattern. So where you look candlestick patterns are lower time frame, where you see, do you have an engulfing candle? Do you have a doji? Do you have a gravestone doji? Do you have a hanging man? Is it a teaser top? But this strategy covers all of them. So we want to focus on the body of the candle, and we're waiting for a retest into the body of the ascending trend line breakout. We have a breakout here, and the first retest here actually tried, but price will still come back here to retest this structure. So if price comes back here to retest, this is where you are going to hit your mind and take your sell order. So we are going to look at that and see if there's a possibility today using our vertical root strategy to see if price can return to this level today. So we'll monitor it today, tomorrow, and Sunday. Our goal is to see that price returns to retest a breakout from an ascending trend line. We have a structure here where price created demand structure. This is a demand structure. This is a demand structure. A week out. This is another demand structure. The trade demand structure has given us an ascending trend line. And even when you switch your line chart, you will see ascending trend, long running enough, and we have a breakout. And this is the retest candle to a broken ascending trend line. I want a retest. But instead of market to come in this way, the market decide to play us. Now we have another breakout indicating that there might be influx of liquidity on daily. These are daily supply roof. Remember, we have got our floor, and now this is now the roof. So you can see on daily, our roof was also broken. So we have a shattered roof on a daily time frame. What does that mean? You can see the price created the first supply, the second supply, and on Wednesday, you see that the structure was partially pierced. If you look through your line chart, you will understand and appreciate what we're doing. If you look through your line chart, this is what we have. So you see on Wednesday, the buy candle pierced through the line, and officially Thursday we have a break from that structure, and Friday was a confirmed buy idea. So what we see based on this strategy, using the body of a daily candle to plot our chart, is that it gives us um, the open mind to know that price can come back for retest. Price can come back for retest. The price have been making series of W structure. Look at the series of the W structure, indicating a swing up. You can see it. Now price are broke out. I want price to return here. If price returns here, it will give it the ability and the liquidity to swing up. So this becomes a valid trade idea on daily. So at the moment, you may stick to a daily time frame and avoid intraday. There are a whole lot of confusion on intraday. The reason is because on daily time frame, I want to see a breakout of the body of a candle, not a wick. If I have a breakout of the body of a candle, it helps us to change our bias. It helps us to change our chart. And where we go back to lower time frame, having in mind the higher time frame interpretation, then we'll scale down to lower time frame and stay guided by the bias of the higher time frame. So we have a breakout on daily here. And when you look on the same daily, we have a breakout from a descending trend line. We have a W structure indicating presence of buy liquidity. The W structures are signifying that there will be a buy upcoming. And when you look at this structure, you see we don't want to call this head and shoulder. This is not an inverted head and shoulder because the head and this head are the same. If it's an inverted head and shoulder, of course we need to have the head higher than the shoulder for it to be valid. So we cannot call that, but this is a W structure. We can call it a triple bottom. We can call it a triple bottom. But whatever it is, we don't care. We are following the structure of the market. And if we are to look at this as an inverted head and shoulder, we will have something like this. This is the head, this is the shoulder, this is the shoulder. And we wait for the break of the neckline and a possible retest to the broken neckline for price to continue to reverse from bearish to bullish, respecting the overall trend. The market is still bullish. So if we are looking for time frame that will align the correction to set price back into its overall trend, then we have to look at it systematically while paying attention to the structure of the market. And price returning at 102.173.78 this morning, London time, to pick up. That was a nice analysis. That was a nice buy. And we sent that buy idea and to the community for free because, this doesn't cost anything. So now, the next thing we want to see is will price return to this level? Yes, there is a probability because this is the lead candle and we have 13 hours to close of the day. So we are going to watch to see if there's a potential return. If there's a potential return, fine. If there is none, the market will continue to upswing until it finds itself into the zone where it's going to retest a broken ascending trend line. This is what I want to see. And for today, if we're estimating that the surge will continue after price finding support at 102.173.78, we apply our vertical root strategy on today candle. If we place it on today candle on technical, it means that the price might tap into this zone for a potential sell opportunity at 109,576.12. Where it cuts across. This is the ascending trend line. We have the first breakout and a retest, and we're expecting another retest to a broken ascending trend line. A previous demand floor broken becomes a supply roof. So based on that strategy and based on that principle, if price returns, apply on a daily candle run today candle. If we are estimating a continuous buy, a continuous liquidity push into the pair, this is where we may likely begin to find our daily resistance. So set your sell order at this level. Set your sell order. The strategy has been tested. We call it vertical root strategy. Our vertical root strategy has never failed. It has never failed except the chart is wrong. It only fails if the chart is wrong. If the chart is wrong, then it's not going to give you a good result. So at this level, you set your sell order at 109,576.12, where I will assure you if we continue to have a buy rally into that zone, that will trigger a sell idea. That will trigger a sell, thereby breaking the previous high. And remember our strategy. Our strategy is based on if you want to buy, you buy on break of a previous low. If you want to sell, you sell at the break of a previous high. That is how to think and to be a businessman. So if we clone this floor and we want to get our root, we want to get our roof, You place it on this week rejection, it gives us exactly where we had our rejection before at 108.291.14. So you see on daily time frame, we came clean, we came prepared, and we came vindicated on daily time frame. You see here price creating series of supply roof. When we cloned our floor, we got our roof, and the price action and the trend line is the same. The trend angle is the same. So it gives us a very strong rejection to upswing. So what does that mean? On technical, if we want to see a heavy surge in the price of this pair, now what we want to see is that price breaks this structure and return here so it can trade in line with the demand floor we have here. So if price returns to this level, what we technically see is a shoot into this level where you see this pair in the zone of 120, 118, 117,000. So price must return to this level. But before that happens, we will see a retest to a broken ascending trend line. You want to see it happen on daily. It has happened before. This is the first time retest after a breakout from the ascending trend line. And I believe the liquidity is pushing to retest again. And a retest into that zone, if that happens today, the sell is going to be 109,576.12. That is sniper entry. So if we are estimating it to be tomorrow, then we move our candle to the next day, then adjust our horizontal supply roof up to where it's going to cut across the ascending trend line. That will be your next place of a market reaction. So you continue to adjust it, you continue to adjust it. If we are estimating it to be Wednesday next week, we are going to bring it to this level. If we're estimating it, we'll continue until wherever price touch this line, that is your sell. If we're estimating that you have a sell on Tuesday, 11 February, it's very simple. We place it on this chart and we cut across. Wherever it cuts across this line, so you set your sell order, go and do whatever you want to do. You will be surprised and you will see you have been triggered. The reason is because of the price action. The price action is correct because when we make analysis, we have to clone it and test run it. See, if we test run and it gives us a clean price action, then it's valid. If it's not clean, it's not valid. If your chart is not clean, it's not a valid chart. This has been tested over a period of time. So you see what we've done here? After we clone our floor, a break of a floor, first retest, we're waiting for a second retest to a broken ascending floor. It's a demand floor. And when we clone it, we place it on the roof. And the roof has given us series of rejection. First rejection, second rejection, third rejection, fourth rejection, and price actually broke from the floor. And also after touching the roof, it came down, broke the floor, and retested the floor once. And we want a retest back into the ascending broken floor. If that happens, then we are going to apply our daily strategy where we focus our mind only on the daily candle. It's called one candle rule for me. The way we define one candle rule is a little bit different. Now, let's look at something, and I also want to throw some light into this structure, and we'll call it a quit from the daily analysis. Here we'll see we have a structure at this level, and we'll also continue to watch it. After a break of structure at this level, you can see what price has done. This is another break of structure where price creates a daily supply roof and break of that structure, price has come down to retest it. I also want to change the color. These are important because the market has now gone into layers and we will continue to trade it layer by layer. We have here supply roof, we have here supply roof, break of a supply roof, price returns here on retest 1, retest 2, retest 3, retest 4, and final retest 5, and price have left. So it's playing on technical. And if you switch to your line chart, you will see how perfect this supply roof, break of the supply roof becomes a demand floor. And price have come down here and respected. So you see the structure of the market, we must pay proper attention. Look at what the market is doing. After tapping into the roof, it creates another structure. Now it's coming down here. The next one could be larger than what you have before. Are we saying this is what will happen? We are not saying that's what will happen, but we are saying what has happened. We are judging the market based on what it has done. Will it do the same? No. But we are only trying to interpret what market has done before. So what it has done before, it did it 3 times, creating the opportunity, creating a higher probability that it will do it again because it becomes a pattern. So we watch pattern in the market, we watch pattern in the financial market. So when an area becomes an area of buy and sell, buy and sell over a period of time.